Ladies and gentlemen, good day and welcome to the Q2 FY2024 earnings conference call of Brigade Enterprises Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M.R. Jaishankar, Executive Chairman of the company. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. Welcome you all to the Brigade Enterprises Q2 FY24 earnings call. I am joined by our Managing Director, Ms. Pavitra Shankar, Joint Managing Director, Ms. Nirupa Shankar, our Executive Directors, Amar Mysore, Roshan Matthew, Mr. Pradibhya Krishna Kumar, and Senior Management Team, Mr. Atul Goyal, CFO, and Mr. Om Prakash, Company Secretary. I am happy to share the following highlights. We have been focused on business development given the strong demand on the residential sector that believe will sustain for the medium term, at least. During Q2, we added approximately 42 acres of land across Bangalore, Hyderabad, and Chennai, with a development potential of 7 million square feet and a gross development value of 7,700 crore rupees. We are working towards launching these projects as quickly as possible, given the strong market demand. In the next 4 quarters, we expect to launch almost 13 million square feet. Out of this, 11 million square feet will be residential with a gross development value of 11,000 crores. Moving to our operational highlights of last quarter, I am happy to report that all our businesses contributed significantly to the growth of the company in Q2 of FY24. With a robust pipeline of launches in Bangalore, Hyderabad, and Chennai, the future continues to look promising, and we are confident that we will sustain the momentum. Coming to the residential sector, the residential outlook remains strong with new sales of 1.66 million square feet and collections of rupees 992 crores, which were our best ever figures for the second quarter of a year. This is a 14% growth in sales over the performance of the previous quarter and 19% in collection. The new registration platform launched earlier this year in Karnataka in June has also stabilized and is helping with faster execution of registrations. We have shown good registrations this quarter despite increased guidance values. Quarter 2 also witnessed the 16th edition of our annual sales event called Brigade Showcase, and it underscored the strong demand from the market despite price increases and higher interest rates than a year ago. We are advancing launches wherever possible and taking up prices across the entire portfolio. We have 11 million square feet launches planned for the residential sector in the next 4 quarters, of which 6.5 million square feet launches is planned before the end of this financial year. Under the Brigade Plus brand, in addition to home interiors, we have also launched rentals and resale services for our residential customers, which is seeing positive responses, especially across projects getting handed over. As regards the office SBU, Brigade has leased 3 lakh square feet in the quarter, recording a 5x quarter-on-quarter growth with 90% of the demand led by technology, engineering and manufacturing companies. September and October 2023 saw an increase in tenant inquiries and it is also indicative of the occupiers' improved sentiment. There is an increased momentum in leasing inquiries, and we have an active pipeline of 500,000 square feet of office space in Bangalore and Chennai. As regards retail SBU, during Q2 financial year 24, there was a 15% growth in consolidated mall retail sales consumption as compared to Q2 of the previous FY23 across the mall retail SBU. Consumption growth for Q2 FY24 had a 7% growth over Q1 FY24 on consolidated basis for all our malls. Our multiplex operators have had a star performing category across all three malls that yielded a 60% growth consumption year on year. This led to a ripple effect of 23% year on year growth in F&B consumption as well across all our malls. The two new family entertainment centers additions in our large destination and neighborhood malls contributed a significant consumption growth in this category by more than 90% year on year. Almost 62,000 square feet of area comprising of 18 new brands ranging from CDIT, supermarket and fashion lifestyle are under various stages of fit out. Coming to the hospitality sector, in Q2 of FY24, the hospitality SBU has continued to show growth. We have seen overall improvements in various aspects of our performance with both our revenue and profits surpassing the numbers of Q2 of FY23. Revenues have increased by 17% and ARRs have demonstrated a 9% increase and occupancy has risen by 7% over Q2 of FY23. We are witnessing encouraging growth in our primary revenue streams, particularly in F&B revenues, which includes a steep rise in corporate and social banquet events. Furthermore, the number of domestic air passengers growing nearly 23% year on year bodes well for the room demand, which is visible in the rising occupancies and ARRs. Additionally, there is an increase in travel from international corporate clients and partners. This brings me to the end of our operational highlights. Atul Goyal, our CFO, will now take you through the financial highlights. Thank you all.
Thank you and good afternoon. On behalf of the company, we welcome you to the earnings call of Q2 FY2024. While Chairman has already shared the operational highlights, I will be sharing key financial highlights for the quarter. During the quarter, we had project closure of Brigade Utopia Serene and Brigade Deccan and healthy registrations, which help us to achieve real estate revenue of 103 crores. Good sales and collection in residential segment has helped us stay with zero debt in the residential segment. As per the company financials of Q2, all verticals of the company continue to do a steady performance in Q2 FY24. The real estate segment clocked a turnover of 1063 crores, whereas the same for Q2 FY23 stood at 632 crores. EBITDA stood at 155 crores, which is a growth of 85% over Q2 FY23. The leasing segment clocked a turnover of 231 crores, whereas the same for Q2 FY23 stood at 192 crores. EBITDA stood at 170 crores, 74% of leasing revenue. The hospitality segment clocked a turnover of 114 crores, an increase of 25% from the same quarter last financial year with EBITDA of 40 crores. EBITDA margin stood at 35% in Q2 FY24. The consolidated revenue for Q2 FY24 stood at 1408 crores as again 912 crores in Q2 FY23 with an EBITDA of 366 crores. EBITDA margin stood at 26%. Consolidated PAT after minority interest for Q1 FY24, Q2 FY24 is 134 crores. Total collections in Q2 FY24 stood at 1439 crores. Cash flow from operating activities stood at 452 crores during Q2 FY24. Coming to debt position, we continue to have adequate liquidity and undrawn credit lines from the financial institutions. Our average cost of debt has been contained at 8.72%, an increase of 107 bps, though the repo rate has increased by 250 bps. Gross debt of the entity stood at 4097 crores. The cash and cash equivalent was 1570 crores as on 30th September 2023. Consequently, the company's net debt outstanding was rupees 2527 crores, out of which BL's share was 1592 crores. Almost 77% of the debt pertains to the commercial portion, which is backed by rental income. Debt equity ratio stood at 0.63 as on September 23. I now hand over to the moderator for questions. Thanks.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Good afternoon. Thank you for the opportunity. The first question is on the launches for the second half. If I heard correctly, the quantum is around 6.5 million square feet, right? And does this include the Chennai project, the luxury one on Mount Road? And where are we on the approvals over there? That is the first question.
Yes, thank you, Aditya. It includes Chennai. We have received 80% plus approvals. It is in the final stage of balance of 20% approval and RERA approval. As soon as that is done, we are fairly confident of launching in Q4.
Okay, fairly confident. Okay, sir.
Launch number is correct. It's 6.5 million is what we're aiming to launch in the rest of the financial year, next 2 quarters, assuming all the approvals are on track and come through.
Okay, and the indicative GD would be 6,000 crores plus, right, for these launches, around 10,000 rupees on average.
500, yeah, approximately.
Yeah. Okay. Second question is on the land payments. So we have paid everything by September for Hyderabad, or is there something pending post September as well?
Yeah, we are fully paid. We are fully paid.
Okay, so the outstanding land payment is after fully paying for the Hyderabad land, right? Whatever is reflecting as the payable for land as of September.
Correct.
Okay. Sir, and just a last question on this Twin Towers project. So what is the leasing status and when do we see the rental start to flow in over there? Yeah, that is the last final question.
Yeah. So the leasing is still in all RFP stages, etc. There is a likelihood, the total project completion also will be in Q1 of FY2025 project completion. It is in the nearing completion stages. And there is a likelihood part of it we may also, sell, strata sell part of the thing. And part of it, one block, it has got 2 blocks. One block we may sell also. It is under various, I would say, strategy discussions.
Okay, so only after that you would like to commence the leasing for the second tower, right? Is the understanding correct? That is the strategy.
Yeah, you can probably say so.
Okay. Fine, sir. Yeah, I'll come back and with more questions. Yeah, thank you and happy Diwali.
Thank you. The next question is from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Hi, am I audible? Hello. Hi, sir. Thank you very much for the opportunity. Sir, I have one question related to residential business segment. If I look at the realization over a period of last 18 to 20 quarters.
Hello, not very.
Yeah.
Not very.
Okay, sir, Sir, is this better?
Sorry to interrupt. Mr. Wadhwani, can you use the handset mode while speaking and not the speakerphone?
Sure. Is this better?
Slightly better.
Okay. So, sir, when I look at the residential business segment, we have done the highest realization of 7,500 crore approximately. But when I look at the gross margin segment for the residential, it is still very low, 23 to 24%. Any reason for that? Because in the past we were doing gross margin of 28 to 29%.
Yeah, gross margin continues to be at that level. It's only that because of the NDS adjustments for the landowners, where there is a JDA, you have to recognize the revenue of 5%. That's why the percentage has come down. So, as and when there will be JDA projects, which will get recognized, this problem is there. But it's an NDS thing. Otherwise, as a project perspective, we are still continuing the same margins.
Okay. And the EBITDA will be for the project level 23 to 25%. Is that correct understanding?
Yeah, sure. It will be.
And sir, regarding the Chennai project, Chennai residential project that we are going to launch in the coming 2 quarters, that project GDV 6,500 crore, and we will be launching the project in the phases?
No, I want to clarify. Only that project GDV is not that much. It was part of that overall number that I mentioned. So the totally 6.5 million that we're planning to launch in the second half, the GDV of that will be 6,500 crores. This is one of the projects that we will be launching in the H2.
Okay. Thank you, madam. Thank you for the clarification. One last question from my side. So we have around 750 crore payments towards the land payment that are due in the coming quarters. So are we looking to fund that through the internal accrual, or will be going for the debt for the residential segment?
So Atul will clarify, CFO, but on that I must say, even pertaining to the previous question of Aditya, we said for the Chennai, for the Hyderabad auction property, I said we have fully paid. Yes, we have fully paid, but about 227 crores was paid in the first week of October. So as on 30th September results, it may be indicated as to be paid, but it is paid in the first week, which is also 1 month ahead of schedule.
Yeah, as far as land payments are concerned, yes, we have internal accruals right now, and of course we have loan eligibility also of around 1,600 crores. So we'll see as to how we have to do the cash flow, and we'll pay it as per that. And of course, residential sales is doing very, very well, and cash flow is getting generated from them. So it will depend as to how much cash is available, but definitely it will be from accruals and some part from the loan.
Okay. That's it from my side. Thank you very much, and wishing you happy Diwali in advance. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Pritesh Seth from Motilal Oswal. Please go ahead.
Thanks for the opportunity, and congrats on good numbers despite absence of any major launches. First, just on the project additions that we did this quarter, I think you mentioned at the initial part of commentary, but I somehow missed out. Can you, probably just mention how much was the project addition this quarter and the GDV, and if you can, help us understand, where we have added these projects. Especially, I'm seeing commercial. There is 3 million square feet of additional land that we have tied up. So just your comments on that.
Hi. Yes. So just to repeat, we said we added 42 acres, which has a developable area of around 7.7 million square feet. The GDV for that will be around 7,600 crores. Predominantly, the land that we've added is in Chennai and in Hyderabad. Hyderabad, of course, as everyone knows, the Neopolis project, which was we won through the auction, that is a big part of it. We've also acquired, the rest of it was in Chennai in 2 different properties.
And this includes commercial as well. So both the properties in Chennai were commercial, because I see 3 million square feet of addition in the commercial segment piece.
So of that, about 2 million square feet is in Hyderabad, and the balance will be in Bangalore and Chennai.
Okay, so our first commercial project in Hyderabad as well. Okay, great. Second, in terms of your Brigade Tech Garden, where we have now 6 lakh square feet roughly vacant in terms of leasing, and I last heard that there was one tenant which was there who is ready to take full tower. So just status on overall how the leasing pipeline looks in Brigade Tech Garden. Can we assume that it would be leased out within this quarter itself?
Yeah. So, Nirupa here. So, yes, we have about 585,000 square feet left in Brigade Tech Gardens. The idea is to obviously lease it out within this fiscal year. This coming quarter in Q3, we're targeting to lease at least 50% of that. The client that you mentioned, nothing has been given in writing, so unable to comment on that.
Orally.
But orally, there is discussion for the full tower, but there could be a hard option element. So we yet have to see how that will go.
Sure. That sounds good. And lastly, on usually the collections breakup you provide between residential, commercial. If you can help me with that number for this quarter.
Yeah, sure. Collections for residential for Q2 is 992 crores. Commercial sale is 37 crores. Commercial lease is 163 crores. Retail is 54 crores. Hospitality is 136 crores. And facility management is around 57 crores. Total 1439 crores.
Sure. Thanks. That's it from my side. All the best and wishing you all a very happy Diwali. Thank you.
Thank you, and then to you all. Happy Diwali.
Thank you. The next question is in the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Good afternoon. Thanks for taking my question and congratulations for a good set of numbers. So my first question is on the business development front. Over the last 1 year or so, we clearly have stepped up our activity. Where do things stand now? Are we okay? Do we want to take a kind of pause in the near to medium term, or are we still looking for more land parcels?
See, it is, thank you, Parvez. It's always we are on the lookout for right opportunities. It is not, acquiring something for the sake of acquiring. It is based on opportunities, and we try our best to acquire at the right price at the right location.
Secondly, in terms of pricing, you mentioned that we have taken prices upward. So on a like-to-like basis, what would have been the kind of price growth, let's say, compared to same period last year?
Yeah, so it is 9% from the last quarter. I'd say, just give me 1 second, it is probably around 15% from the last year.
Well, that's a pretty healthy price uptick that we have seen. And lastly, just a couple of data points. What would have been the contribution from launches this quarter? I mean, the projects that we launched this quarter to pre-sales?
Yeah, so in this quarter, from new launches, we have done around 35% by area and around 30% by revenue. But if you look at the full H1, that would come closer around 40%. So someone had mentioned earlier that we've not done any launches. We actually did launch 1.3 million square feet in the first half. Both of those were in Bangalore.
Sure. Thanks. All the best for future. I'll come back in line for more questions.
Sure.
Thank you.
Thank you. The next question is from the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thank you for the follow-up. First is on the hospitality. On now the current from October onwards, obviously we know that overall demand is good. could you give us idea on room rates and overall RevPAR basis, how much will be trending so far on a year-on-year basis, considering the high base of last year? I'm having for a broad range, not an exact number.
No, the last line is not okay.
We can't hear you.
Hello? Yeah, no, I'm saying I'm asking for a broad range, not a specific number.
Okay, broad.
Yeah.
So I think the Q3 is generally a very healthy quarter. So I think we can expect some increase in the ARRs. But I would say the portfolio is anyway trending around 70% plus occupancy, and I think occupancies will be maybe around the same. We can look at perhaps a slight increase in ARRs. And for the whole year, I think the way Q2 and the H1 has happened, I think we can look at approximately doubling that up for the full year, for the EBITDA, in terms of EBITDA.
No, doubling, you mean year on year, the overall EBITDA for the hotel business, or?
H1 numbers are, we can look at approximately doubling that for the full year is what I'm saying.
Okay. Fine. So that remains pretty slow. Okay. So the second question is, in the last call, I think we alluded on a longer term goal of getting to a 10 million square feet of, I think, aspiration volumes annually. So where are we in the journey, and have you reviewed like what you need to do to get there, and how does the current land availability stack up against that?
Yeah, definitely the goal is to reach 10 million square feet per annum sales as early as possible. I think we are in the right direction. We have tied up a sufficient number of projects and will be tying up few more in this quarter and next. I think sooner than later we should reach within next 2 financial years, if not earlier.
Next to funding, mean by FY26, right? That is the long border. Yeah.
FY27.
Okay, FY27. Okay, fine. Okay, that sounds good. Yeah, all the best. Thank you.
Thank you. The next question is on the line of Akul Broachwala from Avendus Capital. Please go ahead.
Yeah, thanks for the opportunity. Can you just spell out from our existing land parcels at Bangalore, what could be the potential development area that can be possible from whatever other vacant land parcels that we have?
Yeah, just give us a second.
Yeah, it is 300. 25 point.
Hi, this is Pradyumna here. So from Bangalore, we have about 33 million square feet as from the existing land bank.
Got it. And, like in the past, we've spelled out that our endeavor is to maintain market share of 10% in new launches. So can one assume that, going forward on an annual basis, at least 5 to 6 million square feet is what you would aspire to launch in Bangalore market going forward as well?
Yeah. That would be the case. Yes.
Right, got it. And how do you expect pricing to move? Like you've already mentioned that in terms of gross development value that the pricing is definitely going to be higher than what we've anticipated in the past. So do you expect this to probably sustain over the medium term, or do you still believe that we still have enough room to upgrade our launches in terms of higher categories, or what's the exact strategy out here?
See, the general market has moved up due to various factors: land costs, construction costs, improved margins. It is a factor of all these aspects. And whether we'll continue to increase the prices in this fashion depends on the market conditions and what the market is willing to bear. Based on the overall trend, I think the demand-supply scenarios plays a huge role in the pricing, and I think it is based on that. But there will be price increases year on year to take care of the inflation and more.
Got it. That's it from my end. Thank you.
Thank you. The next question is from the line of Prasant Gopal from Spark Asia Impact Managers. Please go ahead.
Hi, sir. So does the Q2 or H1 numbers include any plotted development? And if so, can you give the residential realization ex-plotted development?
So in Q2 and H1, we don't have any plotted area that was sold. We're expecting that to come in hopefully in the next couple of quarters so we can launch that.
And what would be the realizations there in plotted?
So, I mean, like we were talking about pricing increase and so on, it's a fairly dynamic environment. So I think at the time of launch, we will have to see what the pricing is at that point. We've been seeing a movement approximately 5,500 or so. This is for that specific location, but yeah.
Oh, thanks very much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, thanks for the follow-up opportunity. Just one question, after the acquisitions that we have done recently, what would be the GDV pipeline in Chennai and Hyderabad? If you can split it up, that's good, or in total, if you can mention, that's also would be great. So what's the GDV pipeline that we have right now in Chennai and Hyderabad cumulatively?
In the entire land bank, or this is just
Yes. No, entire land bank.
Just one moment.
In Hyderabad, it's about, you can say you're close to 3,000 crores Hyderabad, because we also have 2 million square feet of commercial, which we will be retailing. And the residential sales, we expect about 3,000 crores, when the project is launched. And in the Chennai market, it will be.
So totally we're looking at about, from our land bank, about 20,000 crores between these two markets.
Awesome. So basically now, in the next couple of years, at least these markets should contribute roughly 2,500-3,000 crore to our pre-sales once these projects come up for launching, right?
Yeah, quite possible, yes.
Yeah.
Okay. Sure. Thanks. That's it from my side. Thank you.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, thanks for the follow-up. As far as our hospitality portfolio is concerned, we have one under construction project in Mysore. Beyond that, what is our thought process regarding this portfolio, especially on the scale-up side, and something similar on the retail side as well? Thank you.
So basically for hospitality and retail, I'll start with hospitality first. We are looking to have some hotels in our larger mixed-use developments and townships, because we find that it enhances the overall value of the project and the residential component as well. So most of our mixed-use developments will have some hospitality component. And I think in the presentation it's mentioned that we've recently purchased a property on ECR in Chennai. So that will be on lease. And that will be a resort property, beachfront resort property in Chennai. In terms of retail, again, like I said, for large mixed-use townships. Okay, going back to hospitality, there is a Fairfield in Brigade, Valencia. There's also a Fairfield that we will be doing near the Bangalore International Airport. And then there'll be the Marriott in the World Trade Center, Chennai project. So about 45 rooms will be in the SEZ area, and another 60 odd or so will be in the service apartment category as part of the larger WTC township In terms of retail, again, we will be adding retail components to the larger mixed-use projects that we have. So, for instance, in Neopolis, in Brigade, in the Neopolis site, we will be adding a retail component as well.
So, I mean, compared to, let's say, 1,500 kind of keys that we have in our portfolio, do we have some target that what will be our, let's say, aspiration 3 or 5 years down the line in terms of number of keys?
See, I think with the way the hotel division has been doing and the entire hospitality sector has been doing, again, we're looking at opportunistic areas where we can develop our hospitality projects. Based on how the market is looking, we do have, we think we can add another 1,300 odd keys or so. So the existing portfolio has about 1,474 keys. We think there's a good opportunity to add another 1,300 keys there.
Sure. And one question for Atul, sir. So what was the contribution from BTG and WTC rentals this quarter?
Yeah, sure. The rental for Tech Garden was this quarter was 74 crores, and in PIPL it was 392.
I'm sorry, I asked for WTC Chennai this quarter.
Oh, only WTC Chennai should be in the range of 60 to 62 crores.
Sure. Thank you, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to Ms. Pavitra Shankar, Managing Director, for closing comments.
Good afternoon, everyone. Before we close, we just wanted to share a few other highlights. Our Brigade Foundation, the not-for-profit trust of the Brigade Group, signed an MOU with the Department of Archaeology, Museums and Heritage to renovate the renowned Venkatappa Art Gallery in Bangalore, a way to significantly contribute to enhancing the existing rich history of art and culture in Karnataka. In celebration of 2 decades of unwavering commitment, the Brigade Foundation held 2 events, Sprint Fest, a run, walkathon, and Flash at Brigade, a mega carnival hosted at the 3 Brigade schools. This was to raise funds and awareness of the education and health of underprivileged children. Our PropTech accelerator, Brigade REAP, alongside Realty Next, organized a PropTech Mixer, a first of its kind in India, bringing together VCs and PropTech founders. Nirupa Shankar represented Brigade REAP and the Brigade Group at PropTech Connect in London in early September. PropTech Connect is Europe's largest PropTech event that brings together 3,000 plus global real estate leaders, startups, and professionals. Brigade received an award for World Trade Center Chennai, Best Commercial Project of the Year at the Fichi Risa Awards 2023. Brigade was also recognized as one of India's top builders and one of India's top challengers at the CW Architect and at the Construction World Architect and Builders Awards 2023. The Indian Music Experience Museum recently organized Jackfruit 2023 in partnership with Bhumija Trust. Vidushi Shubha Mudgalji curated this year's edition and featured an exciting lineup of workshops and performances held by phenomenal young practitioners and stalwarts from different genres of music. With that, we now wrap up our Q2 FY24 analyst call. Thank you all for taking the time to hear from us today. Wishing everyone and your families a happy Diwali.
Thank you all, and wishing everyone a happy Diwali and season's greetings.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Brigade Enterprises Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.